Hello everyone, today is Saturday, April 30th, and welcome to Stock Market Fever. Yesterday marked the end of the first quarter of 2022, and the Dow closed down over 900 points in a single session, and the S&P 500 dropped 155 points to mark a dismal day, ending an even more dismal first quarter. In fact, the Dow Jones Industrial Average and S&P 500 Index suffered their worst April performance since 1970, over 50 years ago. Tech stocks performed abysmally on Friday, capping off a miserable first quarter. You can blame it on a lot of factors, such as runaway inflation, or higher oil prices, supply chain disruptions, or the Fed's tightening interest rates. Or you can blame it on poor earnings reports or sharply lowered expectations of future earnings resulting from these same factors. Whatever the cause, investor confidence in prior-to-stalwart name brands has been tested and found wanting, and these tech stocks dropped like a rock. In the wake of the overall market, and more specifically the tech stock smackdown, analysts have been busy revising their targets recently. In this video, we will look at which tech stocks were hardest hit by analysts. Amazon led the pack on Friday, dropping down over 406 points in a single session for a loss of 14.5% in share price. Amazon had opened the year at $34.28, and even as recently as April 22nd was trading at $33.50. Closed the quarter at $24.85 for a quarterly loss of 848 points, about a 25% drop in value. In light of this shock, over 20 analysts lowered their target price for Amazon, while all still maintained a buy or overweight rating, which might lead you to question just how good these analysts really are if they led investors to take such a hit. They all lowered their target price moving forward. Notable amongst the analysts lowering target prices were J.P. Morgan lowering their target from 4,500 to 4,000. Morgan Stanley lowered their target from 4,200 to 3,800. And Susquehanna lowered their target from an insane 5,000 down to $3,800. Another stock seeing major analysts' target price downgrades in April is Meta Platforms, more commonly called Facebook. And Meta had dropped like a rock after reporting slower growth in the face of competition at the beginning of February, had dropped from 343 at the beginning of the year all the way to a low of 169 before recovering. Still, the stock was down by about one-half at its low, and analysts lowered their target prices along with it. Lowering their targets significantly were Raymond James from 410 to 340 on February 3rd, and then again from 340 to 290 on April 28th. Credit Suisse also gave Meta a double smackdown, lowering their target on February 3rd by almost 25% from 430 to 336, and then again on April 21st from 336 to 272 for a cumulative lowering of 158, or 36% downward adjustment since February 3rd. Maybe these analysts with multiple target lowerings figure that if they take them down in smaller chunks, that investors won't see how off they were. Are you curious to see what analysts were chill with Netflix? Netflix had perhaps the most astonishing loss this year, trading as high as $609 in January, only to close the quarter at $190 for about a $400 per share drop and a catastrophic 68% loss in value for the quarter. Analysts leading the way with a double target price smackdown are Piper Sandler with a January 21st takedown from a giddy 705 to 562, and then again on April 20th from 562 down to 293. Hey, don't you feel it's weird that they're coming up with numbers like this? It's almost like they want you to think they have some proprietary way of valuing these stocks accurately to the dollar or just want their targets to be more noticeable. And JP Morgan also twice lowered their target price from a dreamlike $7.25 to $6.05 on January 21st, and then again on April 20th, all the way down to $300. Wow, what a double drop! Do you get the sense that these Wall Street analysts aren't as good forecasters as they would have us believe? Do you feel that perhaps they might even be overly optimistic in order to be noticed? And then the dumb retail investor gets left holding the bag when market events prove them so wrong. What analyst downgrades do you find notable? And what analysts do you still respect and why? Please leave your thoughts and comments below, as we'd love to hear from you. And please remember to like and subscribe so you can get more future actionable news and alerts right here at Stock Market Fever.